All right, so we are now officially recording for another edition of Sunday Market Outlook. It is Sunday, July 14th. This is Rich Vendiga, and I got my guy Brent Badal in the building, and he is about to kick us off. So if you're watching this on YouTube, or if you're watching the recording in the chats, welcome to the call as well, and let's get things going.
Let's go, let's go, let's rock and roll here. So I'm going to share my screen really quick. All right. So the news that we have for the week, again, if you're brand new, just as Rich mentioned, we go ahead and look at the forecast for the news of the week just to make sure we know what important movements are going to happen. Kind of get an idea. A lot of times, like I've said about news, it's not that we focus on the data of the news, but knowing what type of news it's going to be for the reaction and to be ready for that reaction. We're going to go ahead, do what we do, obviously analyze the market, and we're going to go ahead and say, hey, we think it's going to go up, it's going to go up, it's going to go down, going to go down. But we're going to use that news movement in our advantage. So we start off with obviously news here tomorrow, Monday, we have Empire State Manufacturing. Other thing important too, I'll show you here really quick because I know a lot of people here, especially off the promotion that we had, you are running with Tradex right now, TradexMastery, and this is a question that we get asked constantly is, can I trade news? Can I not trade news? If you go to TradexMastery, scroll all the way to the bottom, all the way to the bottom, you're going to see here terms and conditions. Terms and conditions, you go to page, I think it's like 5 or 6, and you're going to see what news you are allowed to trade and what news you are not allowed to trade. Shows US, shows the name. That's where you could put one and one together. So, for example, for tomorrow, for the New York manufacturing, Empire State Manufacturing, you see here, does it show Empire State Manufacturing under US? It does not. We're good to go. So you know you could trade that one. So that's where you find the news if you are in a TradeX mastery challenge right now. So 7:30 Central Standard Time, we have that news tomorrow. It's been red. We've seen Empire State Manufacturing move a lot more throughout time, give a little bit more of a push. So we're going to pay attention to that one. But more than anything, the most important set of news, and right away to start off the week, we have our buddy Powell. Best friend, buddy Powell. Shout out to Powell. Last Thursday, he got us paid during the live session. We took a sell and it dropped right away. So that was a beautiful, beautiful sight. But hey, Powell likes to do what he likes to do. So this one, right? Last week was Testify. So with Testify, we know that the movement could happen a little bit before, a little bit after, and it moves throughout the time that he's speaking. He's getting asked questions basically on the spot. He has to testify. With this one, it's a little bit different. It's Powell Speaks. If you've ever seen the TikToks, the memes where he comes out and says, good morning, and then you immediately see that candle. This is what happens when he speaks, is right at the moment you're going to see 11, 9 out of 10. At 11, you're going to see a big candle, up or down. Sometimes it doesn't happen. It's not always promised, but 9 out of 10 times, right at the dot, you're going to see a big movement. So we're going to be ready for that one tomorrow, 11 Central. That one I know for sure is on there. You got to be careful with that one on the trading side of things. And this is a big one when you're trading news. So if you're not used to trading news, if you don't understand the risk that you're doing, the last set of news that you want to be trading is with when Powell speaks, because this is the heavier. And again, don't fall for the data. He might come out and say, hey, this, and this, interest rates are going to go down, dollar's going to go up. And you're like, okay, great. So that means gold should go down. And next thing you see, gold goes up. So don't fall for the data set. Just understand the set of news that's going to happen to know how to trade it. But it's one of my favorite. CPI, PPI, and Powell, those are my favorite news to trade. So we have that right away to start off the week. Literally, that's why I wanted to get the Starlink, guys, because I wanted to make sure I don't have a live session tomorrow, but I wanted to make sure I could trade that. So I went to pick up the Starlink for that reason. So Tuesday we have core retail sales. We're having that happen at 7:30. A lot of CAD news, Canadian too, nothing that really affects directly the dollar, but it's just the fact that there's a lot of news happening at that time of the day. And it's again that repetition, 7:30 again. We have news coming out again. Majority of us here in Akashics, as you know, a lot of educators, we trade gold. Rich and I, we trade NAS. We love NAS too. But you see a lot of us trade gold. So with gold, you're going to see always a movement happen at 7:30, but you're going to see a movement happen around 8 in the morning, and then 8:30 opening bell is when I trade. So you're going to see kind of those patterns already happen in gold. So this is something good, because if we're already expecting around 7:30 Central Standard Time in the morning for a movement on gold, this will give it even a stronger movement. So I like it when we see at these times of the day. We have that there for Tuesday. Going into Wednesday, we kind of chill a little bit now. We still have news, building pers, housing starting. Industrial, Waller. We have a lot of other news. Housing is something that I've been speaking at all year. We should be getting ready for a crazy, pretty big move on the housing market. So it's something to pay attention to, just because we still live here in the United States. And even if you don't, and if your currency that's moved strongly in your country is dollar, then it's something you want to pay attention to as well. So housing market is something we always look at. Nothing that I'm going to be crazy going into looking for a trade, but it's always something interesting to see where the market's shifting. The housing market is very important. It's a very large indicator for recession. We saw it in 2008, all that good stuff. So it's always good to pay attention to that one, not to trade off of it. Don't fall for the smoke on the data, but it is important just to know kind of what's going on. It's a very strong indicator when we're looking at the housing market. Thursday, fun day again. So we're going into Thursday. I like trading a lot Thursdays as it is. And then Thursday, one more time, 7:30. So again, the week like this is the week that I like when we have news. We have the news happening at a great time for gold. Again, 7:30 a.m., unemployment claims, Philly Fed, manufacturing, and we have a couple other stuff, right? We have a couple of FOMC speakers, long-term purchases, a lot of other stuff happening throughout the day. Nothing really that we need to focus heavily on. Just again, that 7:30 time frame one more time. Beautiful, beautiful time frame to have that news. Closing out the week Friday, we're chill, but still Friday. As you guys know, I don't really trade much Fridays. This Friday I did because I had to scratch the itch, guys. I had not traded Thursday for Wednesday, Thursday. So it's like I need to get out of the house. I need to find some internet. I need to take a trade. So I went, took a trade. It went good. It worked out. But I'm not big on trading Fridays because I like to call it correction Fridays. The market likes to correct a lot of times on Fridays, and it can make a big correction. A lot of times, your indicators, your scanners, a lot of stuff isn't making attention, just not really doing what it's supposed to do. A lot of the analysis that we do isn't really working at that time. And the way that I like to explain it is this. Imagine you work at the New York Stock Exchange in New York and you're working for a big institution. Starting Sunday, they're going to tell you, hey, this is your quota. This is where we need to be at for the week when the week closes. Friday comes, that quota needs to be met one way or the other. So a lot of times we see a lot of manipulation happen on Fridays because big institutes have to do what they need to do, because if not, literally they get fired on the spot. So imagine you're working for a huge corporation. You're working for, I don't know, Apple or something like that, Microsoft, and you are the guy in the New York Stock Exchange. You're going to do what you got to do to hit those quotas. So I'm not a huge fan of trading Fridays. Not telling you guys to not to do that either, but this Friday could be either super relaxed because we have no news and everything could be taken care of with the news, or all the news could leave a lot of disruption throughout the week to where Friday needs to correct and it could be really dirty. So I'm excited for the week. I'm excited to where a lot of us should hit our goals for our accounts for the week, really probably midweek at that point, just because of how the news that we have set up. So we probably won't even need to trade Friday, to be honest. It might be one of those weeks where it's like, hey, I hit my goal on Wednesday. I hit my goal Thursday morning. I'm good. I don't even need to trade Friday. But if you do, just keep in mind, just because there is no news, we went through heavy news throughout the week, so we could see a big correction. But that's it for the news. That's it for the news side of things. Like I said, I rushed a little bit quick right now because I want to take advantage while I have internet, but I could put that out. So back to you, Rich.
For sure. Nah, honestly, man, you're right now it's crispy. Right now it's crispy, so we're good. But thanks, man. Appreciate you for always breaking down the news. I honestly, guys, like I thought I understood the news, but like Brent kind of elevated myself when it comes to understanding a lot of things like all the yellow folders, I would discount them, and then you kind of changed my paradigm on that. So I appreciate you, bro. You see, you guys can always learn something. I'm telling you, like always stay a student because you never know like that one little extra like nugget that can just make a small difference in your trading, but the small differences is the biggest difference. Like honestly, man, I tell people all the time, like, you know what's funny? This thing like breaking down the news, like how you're talking about the yellow folders and like getting a little bit more elaborate, is the same thing as like people message me like, oh yeah, like they'll be like, hey, can you look at my trade history and tell me, like, my feedback or whatever. And then they'll send me screenshots where they're like, yeah, my plan was to risk like, 0.5% on my trades on my funded account. And then I see them losing like 0.6 or like, oh my God, hold on. Look at these spammers. Give me 1 second. Guys, I'm officially like not letting anybody else join this because this is the third time I let somebody in here. and they're scammers. So I would assume, honestly, if you're not here like in the first 5-10 minutes, like you're a scammer. So don't click links. I'm gonna delete all this real quick. And we're gonna keep it moving. All right. But yeah, basically what I was gonna say was that sometimes people will send me like their trade history and they'll be losing like instead of 0.5%, it's like 0.7%, right? And it doesn't look like a lot, but then you realize like they do that 5 trades and it's like an extra percent or two that they're in drawdown for the month. And that's like that extra percent or two that can pass your challenge or get you out of drawdown. Like it's so crucial, the little details in trading to go from like good to great, right? And we have to be very militant with the details, right? So just understanding the news, how Brent breaks it down, man, is just such a game changer. So shout out to you guys for being on here and getting that exclusive information, right? Because I mean, everybody has access to the call, but not everybody gets on the call. So let's get into some analysis here real quick as far as gold. Honestly, one thing I want to start to kind of do a little bit is really like screenshot and incorporate what we analyzed last week so that we can kind of like for a minute recap like the understanding of the direction. So because I don't want to sound like, oh, you see, I told you guys it was gonna do this, blah blah, right? But like we were talking about gold last week, and I had mentioned that if we looked at gold on the higher time frames, this blue zone was very important, right? This demand area. And what I was explaining to you guys last week with like overall direction, right, is that whenever we're looking at a chart, yes, we're going to be day trading, right, or scalping positions, especially if you're trading with Brent. So does the higher time frame matter so much in that very moment of those 1 minute candles, 5 minute candles? No, but yes, right? Because if you understand like the overall direction that the higher time frames are going and you align the smaller time frames with that, the probabilities of you catching a trade that runs for like 90 plus pips versus catching a counter trend trade that maybe gives you 30, 60 pips, it makes a difference, right? And sometimes we're gunning for those higher risk to reward trades and it ends up reversing on you, hitting your break even. Maybe you can only get out with like a TP1. That doesn't usually happen when you're on the side of the big wave, right? And so I bring that up again because last week we were mentioning, just like, for example, we started touching this zone, I think a little bit over a week ago, though. This was the 26th, so this was a while ago. But last week on Sunday, that was here, right? We were down here in price. And, at that time, like if you really look at gold, in this area, so that's where I have to zoom in now, right? And get a little bit more detail. At this time, you're looking at this piece of price action, and someone could be like, man, like this thing's starting to push down, right? And hold on. Did you let them in? Don't let nobody else in. Okay. All right. Yeah, I'm telling you, like nobody is getting in these calls if you're like not here in the first 10 minutes. Sorry, guys. If we get scammers, it means we're doing something right. All right. So that's good. But basically, again, we're looking at this piece of price action on a Sunday, and you're like, man, it looks like a head and shoulders pattern. Some people will say that, right? Like, oh, I studied some chart patterns, right? This is like a head and shoulders. We're ready to go down, right? And you have to keep in mind again the higher time frames, right? And we understand that when we were looking at this chart, overall, we've been pushing to the upside. We had a big retracement. And then we had this push to the upside that broke structure right above here. So when we start coming back down into these areas, until we start breaking and closing below the last lower high in structure, right? Like if we break like this, then we could really say, hey, you know what? Like we're pretty bearish. So if price comes up, we could probably expect price to continue going lower long term. But depending on how price respects this like last retracement area here of demand, right? Shows you a lot about where we're going to go next. And so we respected here, tried coming back down again, respected that, and that's when we pushed. So again, Sunday was right around here. So let me delete all this now. All right. But the easiest way you could do this, guys, is just looking at it from afar and not trying to overanalyze. Like when you're doing a higher time frame analysis, just look at the extreme highs and lows. Like just keep it very simple. Once you get down to the small time frames, yeah, you're going to have to look at more detail. But for overall trend direction, it's literally not overthinking it. You can see a clear extreme high here with a clear extreme low here. And then we clearly see that this is higher high, right? It wasn't a wick. This was a body candle closure above this high. So does that mean that it will make a new higher high 100%? No, there's no 100%. But the probability starts to say that, yes, if we're already pushing lower, right? Now, here's the flip side of things. Obviously, when you're up here, you're not going to be buying, right? Because we're now pushing a new high. Like the chances of us retracing before expanding is probably going to be not as high. But if we know that we want to buy low, sell high, and we had a low and then a new high, and now we've come into this area, you got to monitor how price reacts. And that's when you're scalping with Brent or you're trading on the smaller time frames, like the 15-minute, the 5-minute, and you start to see that it's starting to push bullish. That's a great time to enter because you know that you're going with the flow of the higher time frame. You're just waiting for the smaller time frames to go from retracement to expansion again. So if that makes sense, let's drop some twos in the chat, right? Because that's a big nugget right there. And so from last Sunday, you're in this piece of price, right? You want to keep in mind that, hey, we respected these lows. So if we're still respecting that, we can probably get up here again. And that's where, again, you want to wait for the smaller time frames to align to catch the buys. And I'm pretty sure Joel, I know somebody was buying gold this week, right? Like I know some of the biggest trades, like the big TP3s, TP4s, Brent. I think everybody, I think the last gold trade was sniping it from like here and over here with Muhammad as well. Like people were on the ball with that. So does that mean that we need to buy at this very moment, right now? Not necessarily. Again, a big part of it for me is timing, right? Sundays, I personally don't really trade. So what I would look for is that window. Really, even during London session, you can find moves, right? Because gold is not just exclusively US dollar based, right? The whole world utilizes gold. So you will get really clean moves during London as well. But for my personal trading plan and my realistic, like I'm awake and able to trade, it's going to be during New York. And I'm sure a lot of you guys are probably on the same page, unless you are just like never sleeping, or if you live on the other side of the world where London session is like daytime for you if you're in, Europe or whatever the case is. But what I would be looking for is understanding like, okay, understanding that the final target of where we can possibly go to make new highs if we're following the overall trend is breaking this high. So any buys that I would be getting into, like this is the target. And once we break that target, we have to be very careful whether we're going to keep pushing or whether it's going to poke and drop. Because once that happens, like you see how you make a new high here, you can poke that and drop pretty hard. So we can, expect potentially that same type of thing to happen, right? But until we get to this objective, right, we can probably still analyze for buys. So personally, I wouldn't be going for sells if we're trying to stay with the overall trend, because you could just visually see that we are forming new highs. Like there's just nothing telling us bearish, right? Again, this is just higher time frames, 1 hour, 4 hour that we're looking at right now. So ideally, like if I start going down to a 30-minute, 15-minute, or whatever the case is, what would make me potentially, hesitate on buying is if we start to see price really like crashing below this low and respecting that, then we'd be looking for sells. But as long as we start respecting, this low, right, then this may just be corrections and we should continue to see price going higher overall. There's no like really clean demand zones that I could see on like 4 hour. Really, like the last retracement zone on the higher time frames is from here to here, right? This is that last pullback before the expansion. So in reality, like, if we're looking at pullbacks, I would be looking at pullbacks anywhere in this general area right here, right? And once we're back into these zones, I would be looking for price to shift structure back bullish to then continue riding that to final targets over here. That's how I would be doing gold. So yeah, man, I'm gonna let Brent, give his side of things as well, especially on the smaller time frames, most likely. So Brent, I don't know if you want to share your chart real quick.
Yeah, I could go ahead and do that
Okay.
really quick here. Yeah. Let me see here, because we're pretty much the same as usual. You know, it's typically have our educator confluence over here. On the gold side of things, yes, I do like it. Ideally, I would want to see gold first based off what I'm seeing. I kind of want this here. Let me go to this one, actually. That way the numbers match to you guys. I would love to see gold. This is the 1 minute time frame, guys, just because how I scalp. I would love gold first to come down. Start off the week, do its London thing, come down, keep on doing its back and forth, kind of cover all of this mess, just come a little bit back and forth. But what really is important to me is this move here. We haven't truly kind of taken it. We got half of it, but I feel it should have gone a little bit lower because we
Yeah.
had so much breakup structures, change of characters all here. And then we have what we call our point of control, point of interest, a lot of different names to it. I know that's big on the smart money side, so that's a lot more of Rich's area to explain. I know how to find it, I know how to do it. I don't know how to explain it, so learn smart money with Rich. But we do have a point of control on 2373, but there's an area of interest for me that I see like when I was looking at it earlier today, there's a candle to me, one of those candles that doesn't make sense at 2384. So 2384 is a very important number for me to see. Last week it was 2340, and that was like I had a pending order on my large account, like I was waiting for it, and we got super close to it. And then I was like, all right, it left me, let me start buying. And I know it was a great week. Like I said, it's not that we want to like, hey, we were right, told you guys, but more of just showing. Obviously, the analysis does what it does, right? So really hoping it comes down. We could probably just see 2394. We could see that 83. It could push a little bit down, or it could do what Rich said because it makes sense. It could just be done right here. Oh, that was a really bad line. It could be done right here because this drop already pretty much took care of this half. This drop here pretty much took care of that half. So we could be gone at this point now and then break this top and confirm it and go. So like I'm with Rich on that for sure. I do want to see this kind of go high. Um, the dollar based off news this week that we're getting, it could be favorable. So we could see a big correction come down even lower than what it has been needing to do because our news, I mean, keep in mind, guys, a year ago, gold's number was in between the high 1700s and maybe like the high 1800s. Like 1770 was the number for gold to always be in. Like you would see that 1770, you know it was a buy or sell no matter what. And now we're in that 23 and a half, 24. Like we're in a new realm right now. We're in uncharted territories right now. But at the end of the day, we learn what we learn, we apply what we learn, we stay disciplined on what it is. We don't let fear come to us and be like, oh, we don't know what's gonna happen because it's above. No, we just continue our analysis, do what we do. But I'm with you on Rich. I just want to see this. I would love for a clean week to happen. I would love us first to come down to 23. What did I say? It was 2384.
Mhm.
2384. It doesn't have to be exactly that number, guys. It's just there's a candle at that number that I saw, but I would love us to come down to take this. So now the rest of the week with the news, we're just getting some big candles and ping-ponging here. And that 24, doing a little bit of a highs to fake people, come down to a little lowers, and we're in that range. Nice little beautiful 500 probably pip range that we're bouncing back and forth for the week with the news. So we shall see.
Yep. Awesome. Yeah, as a general philosophy, guys, like whenever we are, looking at a trend, right? And we're seeing that we're clearly, for example, bullish, right? I like you can see Brent is on the same page. Like we invite the opposite to happen first. And the reason why is because again, like the standard easy mindset to incorporate that anybody knows with investing or buying and selling. It could be shoes, watches, purses, whatever. You want to buy low, right? So if we are expecting an uptrend to continue, we want to see a big push, an impulse to the downside, because right there psychologically as well, and this is where the smart money stuff comes in that, Brent is talking about, that is going to trigger a lot of people to make an impulsive decision to just trade what they see in the moment without understanding the bigger picture and without understanding that that is how price basically is created in the markets, right? We don't want to get too technical, but at the end of the day, guys, you have to understand there are literally trillions of dollars, trillions in these markets. Like you couldn't even put paper money like of how much is involved in a daily basis in the markets. Like it's impossible, right? So that goes to show you that there are big hands at play that move price, whether it's especially gold. I mean, that's literally the most sought after commodity of since like hundreds of years, right? Like this is gold we're talking about here. It's everything's manipulated, especially something like that, right? And so we're gonna see, on the charts a lot of opposite direction first, and we want that, right? So that we're able to, again, catch lows and really be able to swing a trade. Because the thing is, sometimes the charts, like I'll share my screen again, right? Sometimes the charts, like we'll see that the trend is bullish and you want to like buy, right? Because you're like, man, I don't want to miss out on the trade. But when you're buying and you have a target, like if I buy, for example, right now, and we have a target right here, the question is always going to be based on our strategy, right? Where's your stop loss going to be, right? And the stop loss is always going to, vary depending on the educator and their strategy and their philosophy, right? I know Brent likes to stick to 30 pip stop losses. The 30 pip stop losses that Brent does really works because he is on a small time frame. But in reality, like if we're looking at the overall structure for gold, right? Just the leg from the retracement to where we're at now is over 1,300 pips. So in reality, even 100 pips is not even 1/13th of this move. When you start to realize that, you have to come to your senses that 100 pips is not a lot on gold. Like if Joel or anybody says, hey, I have a 60, 80 pip, stop loss on gold, and you're like, oh my God, that's humongous. Like some people will say stuff like that. And it's like, do you understand the range that, like, do you understand the volatility that gold incorporates, right? If the whole move from the demand zone here to where we're at now, that hasn't even been a month, like it's just been like a week and a half, has moved 1,300 pips, it should tell you that in a trade that we're maybe holding for a day or two, 100 pips, 80 pips, it's not a lot. It's not a lot at all, right? But if you're entering, for example, like here, and we have these targets based on, how I see the market expanding to make a new high, right? This is a 2-to-1 risk to reward ratio, solid, but that's if I have the stop loss down here, and this is a 200 pip stop loss. Like that's going to be crazy for a lot of people because they don't understand how to position size, how to calculate their risk, etc. So that's why, again, it's better to take a trade where Brent scenario happens first, where we actually push lower, and then we're getting in over here because now we can really have a tighter stop and still, guess what? Target the same exact high because, and then this is just a hypothetical, right? But that's how you turn a scenario where you're making like a 1-to-1 risk to reward ratio into maybe a 3-to-1. And again, it's not just that one specific trade that matters so much, but it's the habit and the process you go to each time that compounds. So if you always go for 1-to-1 risk to reward trades versus always going for 1-to-3s, assuming both of you are with the same win rate, the person making triple the risk is always going to outpace in profit, right? And stay more profitable. So I'm not saying you have to go for 3-to-1. You can do half of a R-to-1. You can do a 1-to-1 and still be profitable, but your win rate just has to be higher. Now, that's a whole lesson on risk management. We have that in our educator training series on Akasha that goes over the math of profitability, right? Because no matter what strategy you guys incorporate, whether you scalp with Brent, whether you like intraday swing with me, or however, with any other educator, it's like, how much are you losing when you lose versus how much are you winning when you win? And out of, let's say, 10 trades, what's your win rate? It's always going to come back down to the math. And sometimes people, like, they just avoid the math of how it actually works because they're just so focused on mastering a candlestick. It's like, yeah, the candlestick matters, guys, but like the math is what gets you paid, not the chart. So it's something you got to really think about. So we're gonna move on to NAS, but I think overall for the the gist of what we have is, again, if we're looking at the higher time frames, we had this zone from 2394 all the way to 2350. This is just a very conservative higher time frame, like I'm not gonna say guaranteed, but like a very high probability that we respect somewhere in this big area. And most likely we're probably going to take this liquidity like Brent is expecting down here. So we are within the big blue box, right? We are within the higher time frame demand zone. So from that point, once we're in this vicinity, what we want to do is start to look at the smaller time frames, like the 5 minute, 1 minute, and start seeing those shifts back bullish for us to go and ride that up, right? So that's gold. For NAS. Let's pull up NAS. So last week, if you guys were like following what I've been doing for NAS, overall, we saw that, you know, we had our first real like strong drop in a very long time for NAS. NAS overall, I mean, since, I mean, this is what I can even see down here. This is May 31st, so beginning of June, right? If we really look at it, like from the beginning of June to now, the biggest drop we had, like this drop from June 20th to June 25th, like it took multiple days, and it was probably slightly bigger than this drop, but this happened like in a day, guys, like in a day. And you know, that's an important thing to note, right? Like what has happened over the last couple of months, that we had our biggest like 1 day drop, right? Now, personally, I like that. Like Brent, you see, this is a perfect scenario of what Brent was talking about on gold, but on NAS, right? Where if overall we're still very bullish as an asset and we have a flash crash in 1 day like this, I like that because that shows me that we have a big room for buy opportunities. And he mentioned also correction Fridays, right? What happened? We had this huge dump off, and what happened Friday? Slight correction. Right, so you can see the evidence of what he's talking about being literally valid in front of you, right? And this was a buy opportunity that we were looking at. I know that we had called it like earlier, and we hit like TP1, ended up breaking even. The next day we had news on Friday. I'm like blanking out. What was the news again on last Friday?
PPI, CPI, one of those. PPI, I think. No, what was it?
Yeah,
It was
PPI. Yeah, it was
PPI.
PPI. So PPI hit, and we saw that we had that drawn liquidity or fake out or manipulation. So another proof of concept that we talk about, like, guys, this is what actually, you know, this is the one concept that really made me want to keep trading when I was like in my first 2 years, and I wasn't really like, it wasn't clicking at all for me. Like I was following Matty Pips, and I was doing binary, and I was doing a bunch of stuff, and I didn't really have clarity as to the why the charts do what they do. I just didn't have guidance, honestly. And once I started realizing concepts like fake outs in the market, I was like, whoa. If like here, literally, I'm going to show you back-to-back days during news. This is news, liquidity drop, drop. News, liquidity drop, push. Like back-to-back days, you're seeing in front of you, again, fake out, up, drop. Fake out, down, push. So if you start to realize that these are not random actions that happen in the market, it means that you can start to calculate the intention and ride the wave, right? Now, again, that's just a whole like entry model and way of trading that maybe is for you, maybe it's not for you. I'm not going to tell you to trade a certain way. But what I'm trying to tell you guys is that whether you follow Brent's strategy or whoever, there are purposeful movements in the market, and that should give you inspiration that you can figure out how to continue to be more profitable or get to that point of being profitable. Because if price is completely random and we literally have no idea ever what's happening, let's go to Vegas, right? Like, let's go to Vegas. But no, you guys do have an edge, but you need to understand that there are forces at hand here, right, that do things very intentionally. And you just need to align yourself with what's going on. Because once you start to see like, okay, the when is so important, guys. That's why we so like preach trading in session, especially for NASDAQ. Because if you're trading outside of like, you know, New York session for NAS, you can make profit. But there's undisputed conversation that you will not catch the biggest moves trading outside of New York session. Like, it's just not the time, right? Like the New York session is when the biggest moves for NAS happen all the time. So you can catch some London stuff, you can catch some Asian range stuff, but you already see the Asian range highlighted here. Like that little PM trading, very small moves compared to New York session. PM trading, New York session. So just don't work harder, work smarter, trade at the right times, right? So with that said, to calculate what we're gonna look for like this week, right? Um, two zones matter to me, right? We have this area of manipulation here and this area of manipulation here. These are supply and demand zones, right? Whenever we have those areas of supply and demand that form with the news, like with the manipulation very evident, I love those areas so much because I know that two things are going to happen. One, we're going to gravitate towards them and we're going to push off of them aggressively. So when we get up to this area of like 20,700 roughly, right? I'm not saying that we're just going to sell it and close our eyes and no stop loss, full margin, hold the sell. But I know that this is a point of interest, like Brent said, right? And so what I would want to see is price to give some rejection, maybe another draw of liquidity with a shift of structure. Brent calls it a change of character, same thing, right? And if we can capitalize on a push, that is going to be a great trade right there. Same thing with this area down here. And I like looking at it in the form of wicks, and I'll keep this part very short so I can pass it back to Brent. But in the form of wicks, we can see that we have a very clear 3-hour wick right here, which is the fake out and the drop, right? And then we have on the 3-hour, you see that wick right there, where we had the fake out with that and the drop. So that's how I don't know how the heck I even came across that. I didn't really learn that from anybody. I just started realizing like on the low time frames, what I saw as manipulation. On the higher time frames, it looked like a wick that just pushed off. And I was like, And I just started back testing it and realizing, okay, these zones matter. So honestly, I'm really just looking for sells off of here and buys off here, just to keep it very simple. Now, what I would need to see again is we need to see price tap back into it and then drop time frames to like a 5-minute, 1 minute, whatever. I would say really like a 5-minute and wait for the structure to align again with the direction that I'm expecting to. I'm expecting it to bounce up, right? So I want to see price kind of tap in here and then shift and really show the shift, and then we can ride the wave. If this doesn't set up, I'm not taking a trade, period. Like I know my setup, I wait for my setup. If it doesn't show up, I don't trade. So I'm going to do the same thing up here, tap, shift, sell, all the way to here, whichever one happens first, because right now during range of Sunday and over London, I have no idea what's going to happen, guys. I don't know if it's going to touch here first or touch here first. I'm just prepared for those two scenarios and then taking it from there. So I'm going to shut up now and pass it to Brent for a sec, but that's my spill on NAS. So yeah, man, let me know what you think, bro.
I gotta share my screen, bro. This is funny as hell. This is a 1 minute, right? So I'm waiting for it to come around 350 to buy. It's literally what you're saying. It would be nice if it comes down to that 200, between 200, maybe hit that previous low around 150. It's for even a stronger, like, because this big wick was
Yeah.
nasty. This was news. So,
Yep.
like, this wick still, we have to pay attention to it. And with foul speaking and all that stuff, we could see it come down to that low. But in the meantime, I would love to see it to go 350 to come up here, right what you were saying, around that 550, 560 area, to sell off of it, maybe halfway through this up that goes down, let it sell halfway through, let it come up, support on this 560 to come up to 800. So we're literally even down to the numbers. We're on the same damn number. So I'm looking for the same thing. Just the only thing, like I said, like we could see a possible, like a lower low that we could see a possible is
Yeah.
this wick. We need to pay attention to this wick right here. I don't want to, I would hate for us to leave and just skyrocket and not come back for this that happened Friday. Like this big wick is just the only one that I still kind of wanna still see before we completely moon. But yeah, that's exactly what I'm looking for, just like what you're doing. So yeah, I'm definitely wanting that one. Then on the chat, I saw a question. Um, how do we read how do we read news like something is going to go up
Uh,
or down after the news? Because last week I was having a gut feeling that gold was going to break structure and move up, so I went heavy on buys on gold. So yes, it kind of goes to that same situation I'll be speaking about right now, bro, right? Where I like trading a lot news even after, like in that same 5 minute period, because we'll see that big candle come down, and eventually it has to, if it wants to continue down, it's eventually going to have to retrace a little bit, get a little bit more of juice to come back down, keep on going. So I like that continuation of the news. Even though I'm not a continuation trader, I like that continuation of the news for that reason. Now, obviously, you get trapped into, you think it's going to retrace and it just does you one of these and then one of these, and it keeps on going too. So everything had happened, but basically, we see a lot of times with that news, that 50% retracement. And there's two reasons why I like, and this hopefully this helps you kind of answer your question a little bit better. So I see it this way. This is what goes into my mind. We're right here, and then news happens, and we get a big drop, and you're having that thing situation of like, hey, it just dropped, so news already happened. I have a gut feeling that it's gonna either continue down or continue up. So with me, I like seeing in the 1 minute time frame and seeing the behavior of the candle. So we're in that 1 minute, we see the candle going up, going down, going up, and we see a lot of times it'll keep on going to 510 and goes up, 510 and goes up. Like it'll slam all the way down and then really slow up, slam all the way down. Like that's called candle behavior. That's really important to kind of get that feeling, and it helps your gut feeling. Your gut feeling is your subconscious. You've seen this happen before. Rich, you touched it right now, right? You didn't really understand why. You didn't really learn it nowhere, but it was always there. It's because, bro, you put in day after day
Mhm.
after day for weeks and months and years looking at nothing but NAS
Yeah.
consistency. You start really that you become one with the chart. It starts getting boring, or you start thinking that you're having deja vu because you've seen this before. That
Mhm.
is a situation too with news. When you're trading with news, I've been trading news for over 3 years now. So it's one of those things to where I see the candle happen. It's like, oh, I've seen this before. And it's a subconscious, right? Now, what happens a lot of times, I like that's why I love the smart money side of things. And I've always been in conspiracy theories and all that stuff, right? We see a big drop, and then we see a big candle go up maybe. Well, if it goes up and it goes really strong, like if I see it go up and really fast and it's going strong, a lot of times to me, what that means is that the institutions are going to start making you think that it's time to buy.
Yeah.
So now you're going to wait and you're going to go ahead and buy right here. And guess what's going to happen? It's going to drop even more because all that it was doing is getting a 50% retrace, which in my mind, this is what it is. Somebody was lucky enough to buy right to sell right here and is deep in profits. And the institutions, they want the market to come down here. But they know some people got in here being retail, and it's not them, and only the banks need to win. So what are they going to do? They already know that the majority of us moved our stop loss already down, and we're moving our stop loss. So what is it going to do? It's going to hunt those stop losses, kick people out, and then continue down because only the institutions want to make sure they get to where they want to get. And we need to be on that right side. So hopefully that helps you a little bit at that point. That's how I see it. Like I said, I'm not very much as far as like when it comes to technicalities and whatnot. That's how I
Yeah.
get it. I know I may be saying there's maybe a ton of technical fancy words to it that I don't know, but that's how I rock and that's how it works. But hopefully that helps out.
Yeah, I want to see if I could jump in on that real quick, like very briefly though, because I mean, you pretty much covered it. I think at the end of the day, with that question of like, hey, like the question reads, right, like how can we read news? Like something's gonna go up or down after the news, right? And at the end of the day, guys, like structure doesn't lie, but you have to understand that the smaller the time frame, the more structure can lie, right? And what I mean by that is like you're gonna see on the 1 minute during news that you're gonna have like breaks of structure to the upside, and then you might get like the crash to the downside, and then it actually ends up going bullish to the moon. And you're like, dude, it broke structure, then it broke structure, then it broke structure. Bro, market structure is a lie. It doesn't work. Well, when you go on the 1 minute and you do it during news, that's gonna happen, right? So I think that is why there's no easy way to explain it. Because you're basically saying like, how can we never be wrong? And you're gonna be wrong. Sometimes you're gonna be wrong. Like sometimes what you think was the fake out and then the actual move ends up being the fake out move. You don't know if you're gonna get like, okay, I'm gonna break it down like this. CPI, I've noticed that sometimes it just breaks and it never goes away. Like it just goes. And I'm talking about like NAS really, because that's all I trade right now, right? Other things like Forex pairs, I mean, you guys gotta get intimate with what you're trading. If you spread yourself out and trade 20 different assets, you cannot master the assets. Sorry. So if you're gonna do that, the only person I know one person that trades like that literally has like 20 pairs and they're balling, but they swing trade on the 4 hour of supply and demand zones. So looking for opportunities, like one pair, and they probably don't see that pair for a long time. And that's why they have a diversification, because they're so high time frame trading that if you wait on one asset to get to your zone, you probably won't take a trade for a whole couple weeks. If you spread yourself out and you have multiple assets and you're swing trading, then okay, I can see where that makes sense. If we're day trading and scalping, how we're doing, and you're trading anything more than 2 or 3, and especially if you guys are in your first years, like, again, tap to trades, trade alerts, that's your source of trades to take trades, guys. If you want to master the skill and get good, just stick to 1 or 2, dude, because you got to get really intimate with these pairs. Like, you know, the thing is, honestly, and I'm guilty as charged for some things like this. Like, how many people really have documented what happened the last 5 CPIs, just CPIs? How many people have documented the last 5 NFPs? How many people have documented the 5 last Powell speakings? I'm talking about for their 1 or 2 assets that they trade. Like, actually document the last 5, 10 CPIs. This is what happened. Fake out move, or fake out move, or whatever, right? I don't have those notes right now, and I'm an educator. But if we're being real, like, if you want to master news, like, you gotta see what happened historically to give yourself data to go off of the probabilities of what can happen next. For example, if we trade CPI news and the last 5 CPIs, 3 out of the 5, it was like fake move, there's a high probability that fake move is typically what happens. But if you go off of that and it doesn't do that, now are you a bad trader? No, it just means that the probabilities just didn't work in your favor and you took an L and you move on. It is what it is. So you guys are never going to get every trade down pat. There's no way to know. People that want to know what's going to happen are always going to be like freaking out or like going through it with their trading. You have to navigate uncertainty. If we want certainty, work a job. And even then, right? If we want certainty, like, this is the last place to be. What gives you the only certainty here is risk management, because you develop a strategy where you look for patterns or you look for certain things to align to where either more times than not it works in your way, or when it works your way, you're making triple what you lose when you lose. Again, it always comes down to win rate and risk to reward. So depending on your model of how you trade, you either need to win 6 out of 10 trades, risking 1% to lose 1%, or your winners have to be double or triple so that you can lose 7 out of the 10 trades and still make profit. However you want to do that and slice that is why you have a list of different educators and styles to really go with. So that's what I would do, guys, is just like stick to, like, for you see us, Gold NAS. And so you're only like, man, these people, like, they called the buys, they called this, it worked out. Well, damn, man, that's like the only thing I'm looking at. I'm looking at NAS more than my wife sometimes, dude. Like, you know what I'm saying? Like, it's crazy, but you have to do that. You have to do that. It's the only way to do it. So I hope that kind of answers your question in a way. It's just you have to really study and get intimate with whatever asset you're trading and see what tends to historically happen. And then market structure, man. Market structure. Yeah, so we covered NAS, we covered gold, news for the week, Tammy. So yeah, guys, I mean, that is pretty much for our analysis and everything that we have to kick off this week. You know, we always like to give like a last, you know, like mindset gem. I don't know if you got one for the crowd, bro. You got something you want to leave off this call with?
So they always go off the fly every time, and that's when they come out the best. But I mean, and I always do it based off the call, right? And we're saying it right now. So I mean, there's something that came to my mind right away at the beginning too, when we were talking about I like how you said it, right? Well, you always go in with expectation, but be ready for another one. There's a great movie, guys. It's one of my top 10 movies from Robert De Niro called Ronin. Right when the movie starts, he says, like, he goes into a bar to meet these people and he's looking right away. Like, you see him scanning, looking, he comes through a back door, this and that. And he says, I never go into a room without knowing 2 doors to exit out of. And that's really what trading is, guys. It's not that he doesn't go in with the expectation of failure or this because they're heisters. So it's not like they're going in expecting to get caught. We're not going in a trade with the mindset of like, oh, we're going to lose, but we're going in saying, hey, preparation, I want this to do this, this, and this. My risk management will let me do it. And if it doesn't go my way, then I already know what the next move is. If my buy hits stop loss, well, it's because it broke that zone, and I'm going to wait now for it to retest in the bottom. And now we're going to go in for a sell, or we're going for the buy, or whatever it is. So just super important to not get caught up. Obviously, I always say on the money side, don't get caught up on that. Look at the pips. And I love what you were talking about too, Rich, as far as the 100 pip versus 30 pip. Same situation like I tell people when they come in my team, right? Hey, I trade NAS, Rich trades NAS. I take typically 200, 300 pip risk. He takes 500 pip risk. Take it. You should be risking the exact same amount, which is 0.5% or percent, whatever your risk is at that time, right? It doesn't matter. If you want to translate it in dollars for those that are a little bit new, if you're going to risk $100 on a trade, it should be $100 on my 200 pip risk and on Rich's 500 pip risk. The exact same thing. So don't be afraid of it. Obviously, depending on your size of your account, you might not be able to. Like, hey, I could only lower my lot so much. Then okay, with time, your account will grow. You get a bigger profit from whatever it is, and you'll be fine. Don't rush into it. And really that's the thing, guys. It's just it's time. And I've said this before too. Don't try to like come in right away. You're trying to eat the whole world in one bite, and I'm gonna trade every single pair, and I'm gonna be not like guys, that was my mistake at the beginning too, because I was trying to make sure that what I was trying to do is kind of reflected into the binary side. Those who traded binary, I used to use a broker that you could put your assets on the top. So I had like 20 different ones all in the top on my big screen. And I'm just clicking each one to find that entry nonstop, trading and all, like just back and forth, not doing things right. And Luis, which is an educator too, he was one of my mentors, and he's like, cut it off. Like, why do you have all these? So, like, what he did basically was break down and have me speak out loud. And that's what you guys need to do. That's the hardest part. Look yourselves in the mirror, grab the phone, look at the reflection, record yourself. I don't care. That's the hardest part. And that was very hard for me at that time. And he was like, why are you doing this? I'm like, because I need money. Like, I need money. I have this problem. I have this, and this. And he's like, well, you're tripping over pennies for dollars, literally. Like, I see how you trade gold, delete everything, close. That was so hard for me, guys, to go. I was already trading Forex. It was so hard to go in my trading view and literally do a right click close, right click close. Like it was so hard because in my mind, I'm like, what if I find the perfect entry on GBP USD? I hate GBP USD, but I had that on there because I was just trying to chase and get money and get funded and this, and that, all the wrong reasons. I know that maybe brought you in here to trade because that's what we're all here for. We're not going to be naive either and say that you're not here for that, but it was just for that purpose only, and that's the wrong reason. It wasn't really to learn the skill set. That's where you really get to the next point. Deleted everything and just looked at gold literally for 6 months. And I did what Rich said right there, which I don't do that anymore, right? Not that I shouldn't be doing it, to be honest, but literally I had an Excel sheet that Luis gave me, and he made me type every single trade that I would take. I cannot take, literally, when I took one trade, after the trade, I had to put there how I felt taking the trade, like my emotions, where I went in, why did I go in, what was the result, what was my emotions after, like everything. Like it was crazy that I had to do that, and I could not take a next trade until I filled everything out. So like what he was doing is preparing me for a lot of times what you guys are not doing at that time is you lose one and what happens? It hit my buy hit stop loss. What am I doing? Buy again. Chill. Like, why did it hit when you bought it the first time between where it hit stop loss? What changed in that time frame? And a lot of it is emotions. A lot of it's emotion. So when you're actually writing down logging, I hate logs and all that stuff just because it's like, uh, I want to go into the trade. I'm a scalper. I'm a 1 minute scalper. I want to trade more. But that helped me so much to stop. Because if you guys see me trade now fast, the before me that was not disciplined was crazy, guys. Like crazy at that point. That logging part helped a lot for sure because it's just the reflection of what you're doing. You're not going to realize a lot of times what you're doing until you actually write it down and then you look at it. If you lost the trade, you burn an account, then you're like, man, what did I do wrong? If you lost I think we're going to close with that one. This is a good one. I'm glad it's recorded. If you burn your account, if you burn your prop firm account, if your account fell fund, it goes to zero, and you ask yourself, what happened? You. That's a problem right there. You had plenty of trades until like if you're in a prop firm, you have to lose 5% a day or 10% total. If you were taking 0.5% trades, then that means you had 20 bad trades in a row to do. So if between that first bad trade and 20 bad trades in a row, you do not know what happened, you don't understand why you burn your account, there you go. That's why. You weren't controlling yourself in between. You weren't logging. You weren't seeing what's happening. So yeah, that actually came out pretty good. Like I said, this is just it's coming off the dome, so that's actually not bad. But yeah, that's it. Let's go ahead and have a great week, guys. Obviously, this is time. And again, just to wrap up on the news things, I know that gets asked a lot, and same thing through trading, guys. And that's why I said that candle behavior to me is so important because there's so many times, guys, where you're gonna not like you're gonna try to follow a specific indicator or a specific strategy or this and that, but that's where really manipulation comes in. And really, the way you're gonna learn candle behavior, it's not gonna be on a book, it's not gonna be on a course, it's not gonna be on videos, it's gonna be you staring at that candle. And if you're at the 15-minute time frame, guess what? You have to stare at that candle for 15 minutes. Do this. And then you start realizing like how that candle is behaving. Like, what does a sniper do? They lie down for hours. What does a lion do when they hunt? They lie down for hours. The tiger jaguar's in a tree waiting for hours and looking at its prey go back and forth, back and forth, back and forth until it finally realizes that every time it goes here, it comes back, it takes 2 seconds. Every time it goes back here, it takes 2 seconds. All right, 1, 2, 2, and that jaguar jumps off that tree and snatches that.
Isn't that
Guys,
crazy
it's
how, yo, it's crazy how nature like shows you guys like patterns of what works and what doesn't work. Like it's all the same. That's why I've said this so many times. Like the way you do one thing is the way you do everything. Like that is such a great example of why we say that.
yep.
And
Had you
here's
like a
the
cream
thing,
of the wheel
like
off that.
it's just aligning yourself with that. And sometimes we have to smack ourselves against the wall 1,000 times for us to like, for it to finally hurt enough to be like, I'm probably gonna take a step this way this time. You know? The reason like some like the number one, well, one of the top questions we always get to Brandon, I know you'll say this, right? As we end this call. How long does it take to be successful? Two things with that. What is success to you, right? And the second thing is how quickly do you learn and change? Like learning is one thing, like concepts, right? Like 1 + 1 is 2, whatever, right? But concept and execution are just two different skill sets. Trading is not one skill. Trading is actually a combination of a lot of skills that get put into a word called trading. But trading is comprised of emotional control, pattern recognition, simple things like waking up early on time, ready for the market, being prepared. Like it's just you have to like align yourself to do a certain way, and if you don't follow that way, it just won't work. And you can't have one hole in your game. Like you can be a chart expert, but if you like get emotionally rattled, you can be the best chart person in the world. It won't work because you're gonna go on tilt and throw away the progress you make. Like you can have 10 great analysis, be up 10%, and then 2 trades you lose in a row, you start doubling your risk because you get mad and you throw it away. So there goes the chart work, right? And then your psychology could be really on point and your risk management is great. Like you never risk one, you have to, you don't get rattled, you don't get emotional, but you haven't learned a strategy. Then you need the technical analysis understanding of the charts. So it's a 3-pillar game that you cannot, like it's like a 3-stool, right? The stool with the 3 legs. If you miss one leg, the stool falls over. You have to have all 3 going for you. But what I'll tell you guys is just keep going, man. Like it's the corniest, simplest thing, but at the end of the day, it's the repetition. You know, like you just have to, and there's never gonna be the day that you know it clicks. It's just it creeps up on you after a certain rep. And I think we said that last time too. So biggest thing that you guys have going for you is you have each other, right? Like we're on this call, you guys can ask questions, get help, get inspired. But man, like you just keep taking that next trade and learn from your mistakes. So appreciate you guys. Let's crush it this week. Super grateful for each and every single one of you guys, man. We have something very special here with Akashex. And honestly, the special thing about it is you guys, man. Like you showing up to these calls. I'm gonna be real. Like if no one shows up to the call, we just end the call and we go about our day, right? So we're here because of you, right? Like we want to pour into you guys so that you can be, I don't know, the next success story, the next educator. Like Akashex is a baby, guys. Like you need to understand that you have equity. So many people, you go on Shark Tank, you watch these shows, like they always want equity. Like the sharks want equity. They want ownership. And Akashex is something right now, man, that it's blew up. Like thousands of people just joined, but compared to where we're gonna go, like it's so early. So keep studying, man. Like keep being a person of value. Like the more you know, the more you can teach. And if you notice, the people that know the answers to the questions are the ones that are making the most money right now. So tap to trade's great. Barely doing anything and just following educators is fantastic. That's the vision for the customer base. But man, I'm not gonna lie, like these calls filter out the serious people. Let's call it what it is. So we love everybody, but the inner circle, like this is a good inner circle. And you guys need to see yourselves that way though. It doesn't matter if you've made a mil, 100 grand, $5. If you know something more than the brand new person, you have value. You are something to Akashics. So take ownership. This is our brand. Let's take this thing to the moon. Appreciate you guys. And let's have a great week. All right. So Brent, thank you so much, bro. Your internet is crispy, bro. Your internet's doing good. So fingers crossed. But you guys have an amazing rest of your Sunday. You guys have a great week. Anything you guys need, please. We started these new chats that have like help sections. You guys know us already, man. We do this all day. So just let us know what you need for you or your teams. And let's run it up. All right. Appreciate you guys.